Welcome back to Fast Money. Shares of Netflix soaring nearly 10% today. It was the second best performing stock in the S&P. The move comes after Atlantic Equities upgraded the name to an overweight. It's our call of the day. Analysts saying that the launch of an ad-supported tier later this year could boost the streamer's share price back over $280. That's a jump of nearly $40 from today's close. Quick reminder, Netflix is still down 60% this year. And to boot, Carter Braxton Worth of Worth Charting sent out a note today with a number of charts, 4 of them, I believe, saying it's a buy here. So you got these two things going. Dan.
I mean, some of us would say it looks like it's ready to party. I mean, there's some huge gaps in this thing. The news has not been particularly great. It showed really good relative strength to the market when it was selling off in August. And again, there's this huge catalyst. I mean, the very thing that kind of took the stock down, it could be the very thing, if they get right, will take it, one step at a time to fill in those gaps. I think that we have really had a hard time saying that Netflix looks reasonable on a valuation basis for a very long time, as long as we've been doing this show. Value Lady bought it right over the summer when it was in the hole.
Like one share.
Well, I bought the one share by accident, and then I added after that. Remember the Crown? Yeah. So I bought on the Crown. Only it got filled on one share. Bought some more. I mean, the valuation has come in, and I think that just when they missed twice, it was really the second miss that did them in.
Yeah.
And all that momentum for whatever it was, a 600-plus stock, they just bailed out at any price, no matter what. That's an interesting dynamic to me.
700 print, actually, which is remarkable if you think about it. And we all probably, well, I shouldn't say. I know I loved it then, too. So the move down to 180 or so was just hair-raising. But we actually all said at the time, it was the first time maybe ever you were able to buy Netflix at a market valuation. Even with the move, it's only trading at 23 times next year's numbers, which is reasonable. So 285, given, again, it doesn't matter where we are, but in terms of valuation, is not unreasonable for the stock. So CBW likes it. Dan and Karen like it. Courtney probably digs it. Stranger Things, by the way. Tremendous.
You've seen it? I thought you didn't know how to stream anything.
No, I get people. I don't understand.
You
it's like
people for that.
Well, I don't have people for that. I have kids, but they help me. But I can tell you, Winona Ryder, badass, digger. I mean, this has done more for her career than Beetlejuice. Remember that?
No.
Yeah, you do.
Courtney, do you dig Netflix, as Guy put it?
Yeah, and I think as long as you're assuming that they can hit these numbers, this does look very attractive, because their whole issue is that they're kind of stalling out with customers. But if we're in this period now where maybe people are having to cut their expenses, they're coming out with an ad-supported tier to say, okay, you don't have to cancel Netflix, just get the lower subscription, and we get ad revenue out of it. It's kind of a win-win for everyone, which is really interesting with Netflix.